I think it's there.
Okay.
Vic, so I think probably the best way, if you want to give a quick introduction on your end, I'll give a quick introduction and then I'll try to stick to 10 minutes on. I'll give you a quick overview.
All right. So very quickly, nice to meet you all. I'm Victor Noira, one of the co-founders of Flat, originally from Spain, engineer by background, and I was at BCG, the Boston Consulting Group, a consulting firm, for 8 years, working in financial services. Did my MBA at UC Berkeley, where I met Bernardo. And then in 2016, Bernardo and I started a small seed fund in Mexico that went really well. And that evolved to starting Flat in 2019. So we moved from investors to operators.
Perfect. So quickly on my end, so I'm Bernardo. I'm originally from Mexico. So I've been in tech for the last 10 years after doing my MBA at Berkeley, which is where I met Victor, came back to Mexico, founded an e-commerce company called Linio. We started that in Mexico. We ended up in 8 countries in Latin America, grew to over 2,000 people. We were probably the first big tech company locally in Mexico, actually building technology from here for the region. Then I founded the local e-commerce association, then met back up with Victor. We started the fund where we invested in fintech, and we missed operating. Wanted to come back and start something from scratch. Real estate had also been in my family background for forever. We decided to launch Flat 2019, and we've been working on it for the last 3 years. So that's a bit of the background. So jumping into this to make sure we're on time. So I would start with the problem and what we saw. So for you understand residential real estate in Mexico, one of the things that we realized was that we've worked on a lot of technology companies that work in the US, work in Europe, and you can bring them to Mexico. This is one of those that we think works even better because of how the ecosystem is set up. In Mexico, it's a place where there's very low access to credit, and that means that any liquidity solution that we create, we're able to have much higher margins. Mexico is a market where there's no public information on how much a home is worth, right? People don't know how much their home is actually worth in the market. And that means that as we've been able to create and as we've been able to collect all this information, we have a huge advantage in the market. We have data that nobody else has. It's also a market where they don't have to be certified. It's a market where you don't have to use brokers, so we can disintermediate, create solutions where we can go direct to sellers, go direct to buyers where we want to. Low cost of labor allows us to do things like renovations at scale, do home inspections. And then the last point, which is probably one of the most important points, is Mexico and the region is a place where prop tech is just starting off. So it's giving us the ability to go very broad and create a full end-to-end solution because there's very little competitors out there, right? So with that in mind, what we decided to create was this full end-to-end platform, create a full marketplace where any product, any service in residential real estate, you can get it through Flat. And that's what we created. We've been growing very fast. We've grown 6x year over year. We're at over 36 million in run rate GMV. Our margins are stronger than any other company in the sector. We have a huge data advantage, and I'll talk about that in a second. And we've done really well on fundraising. We've raised over 30 million in equity. The market is huge, not just Mexico, without considering any other country in Latin America. Just on the buying and selling of residential homes, it's an over $38 billion market a year. If we add in the financial part of that market, it's another $25 billion. So a huge market. And what's happening in Mexico over the last several years is incredible. As I said, I started Linio in 2012. What's happened since then till today in terms of not just investment in technology, but what consumers are doing with digital, it's completely different from even 2, 3, 4 years ago. Mexico has been the fastest growing e-commerce country in the world the last 3 years, and a lot of those customers are coming to real estate and looking for much more digital solutions. So I want to quickly talk about the different products, and then I want to talk about the numbers. So if you're a seller and you come to Flat, you get 3 different options. Option number 1, we'll buy your home from you, instant sale, right? You give us information on the home, we'll give you an automated price. If you agree, we'll buy that home, we will remodel it, and we'll resell it. Product number two, it's a product we call guaranteed sale. This is a product where we don't acquire the home, but we tell the seller, if you agree to put your home at market price from day number one, we guarantee that we will sell it in 6 months or less. And if not, we'll pay you a fee. This is something that nobody else does in the market. The average time on market is 1.5 years. So guaranteeing 6 months is really, really strong value proposition. And then option number three, what we call managed sale. Here, the seller can come out at whatever price they want to come out. We will sell that home with the hundreds of brokers that we work with in the market and help sell that property, right? So 3 different solutions for sellers that, depending on how fast they want to sell and at what price, each one is more or less optimal for them. That's from the seller point of view. From the buyer point of view, what we created is what we call certified homes, right? If you buy from Flat, you're buying a property that has gone from a 200-point inspection where we check that everything works within the property. It comes with a 6-month warranty that if something doesn't work after buying from us, we'll go and fix it. And it even comes with a 30-day buyback guarantee that if you didn't like it, we'll rebuy it from you, right? So what's really important here is that for the first time, you can buy a home from a brand, right? You can buy it from a brand that guarantees that everything that you're buying is guaranteed and is correct. And then also very important, we created a third-party marketplace to give more options to our buyers, right? And this means that brokers, developers can list their homes on Flat if they go through this certification process. And that gives a lot more volume, it gives us a lot more data, and makes us much, much bigger. And then we have the financing vertical. Within the financing vertical, we have 2 different solutions. One is a digital mortgage brokerage. We give financing through the different banks to our customers. And then a second product, which is very important, which is called buy before you sell. How this works is anybody that has a property today and wants to acquire another one, then the bank will not give you a double mortgage. The customers can't afford 2 different homes. So what we do is we'll finance the second home while we help them sell their previous home, right? And we think this is a relatively new product for us, but we think it's going to be a huge product because over 50% of the customers or sellers that come to Flat, they're selling because they want to buy something else and they have no other option of how to do this. Very important, we're doing 2 M&As. We're closing the acquisition of another digital mortgage brokerage, which will make us much bigger, which will increase our take rate to 2%. And which will give us a license, which is called Master Broker, which connects us to all the banks that we do not have connections with today. The second M&A that we're fully closed on is we bought the most important data provider in Mexico. Here we have information that nobody else has because we access this through contracts that we have with all the major banks in Mexico. So this allows us, as I said at the beginning, to have better information than anyone else. And that makes each one of the products that I talked about before much stronger. So I want to move to numbers to make sure we have time. No, we've been growing really fast. You're looking at the left at run rate GMV. So sales, we went from 16.5 million in Q4 to 21 million in Q1 to 36 million in Q2. That's 6x growth year over year. That's over 70% growth quarter over quarter. And then that's been coming from the different products that we have. No, instant sale, brokerage and third-party marketplace that we launched in Q3 of last year now represent over 50% of the business. So a lot of diversification across those different products that I talked about. Then on the right, it's credit origination. It's a part of the business that's going to be growing fast. We closed at 2.4 million. And then what you're looking at there is 84 million in Q3. And that's because a lot of the numbers of that mortgage brokerage that we're acquiring will be coming into the business. So that in terms of the numbers, I want to jump quickly into what we've done so far in terms of geography. We're already in the 6 biggest cities within Mexico. We'll continue to expand within the country later this year and next year. And in 2024, we will be looking outside of the country. We've been very focused on Mexico is such a big market on itself. It's much better to go very broad on product first, and then think about international later, because that allows us to be able to create that full marketplace offering that nobody else has been able to create in the market. And then last, just to make sure I get enough time, we've been going through different rounds of fundraising. We have a lot of very strong backers, whether it's investors that are in the prop tech space, specifically in the US. So the founder of Open Door, the biggest solution in iBuying, the founder of Divvy Homes, the biggest solution in Rent to Own, the founder of Fly Homes, which is the biggest solution in Buy Before You Sell. All of them invested directly in us. And then we have more institutional VCs. AllVP is the biggest fund in Mexico. We have funds like Anthemis, which is one of the bigger fintech funds out of UK, 500's Growth Fund, Expa, which is one of the founders of Uber. We also went through Y Combinator, which is the biggest accelerator out of San Francisco. So really strong backers. So that's what we've done today. As I said, we've been growing 6x. Plan is to continue growing aggressively as we move forward and continue to develop that stronghold that we have in the market through that end-to-end platform where any service, any transaction in residential real estate, you can do it through Flat.
Great, Bernardo. Thank you for this excellent presentation. I don't know, Victor would like to add something, or this is the end and we can transfer to Q&A from investors?
That's the end. Bernardo did a great job.
Great.
That
great.
was really good. Yeah, that was really good. I was taking some notes. So I'll be switching between Russian and English. Господа, есть ли у кого-то какие-то вопросы? Если вам удобно, можно задавать голосом. Если вам удобно, можете писать. Писать можно по-русски, можно по-английски. Я буду озвучивать. Okay. I think we had a few questions as well. Vladimir, do you want to ask them, or I can? Vladimir actually prepared.
Yeah. Well, I've got a list of questions to Bernardo and to Victor. I guess they covered basically all of them, maybe except for one or two. So basically, the main question is from the investor's perspective, how large Flat can become, and this boils down to, you start always with the market, right? So how the market, how big is the market? I mean, the amount of dollars that basically goes into this business, and then you basically go to the share of the market, potential share of the market of Flat, and then through this you project your revenue, and then from the revenue you project your valuation. And what are the vision of the founders in terms of this kind of journey through the revenue that Flat is going to be generating, let's say in 5 years from now? So how big it can become in terms of revenue and valuation numbers, and then ultimately, what are the potential exit scenarios for the founders and for the investors? Thank you.
Vic, you want to talk about size of market, et cetera, and then I can talk about exit scenarios?
Yeah, sure. So as Bernardo was saying initially, the amount of residential real estate that's transacted in a single year is close to 40 billion in Mexico alone. When you take into account Latin America, that's close to 300 billion. In terms of, but that's not the only vertical that we are targeting, right? Because we also have financial products. And as Bernardo was saying, the market for financial products for mortgages, there are about 25 billion originated in Mexico in a single year. We think that getting a market share of about 5% within Mexico is quite reasonable. We still have a long way to go to get to that 5%, but we think it's very feasible within the next few years. And once we feel we have a dominant position within Mexico, I think it makes sense to start expanding to other Spanish-speaking countries in Latin America. But the priority has always been becoming the leading platform in Mexico before expanding to a different geography. But yeah, so rough numbers, we think getting to 5% of both markets should be really feasible.
So in these 5% of the market brings you to which like approximate amount of revenue per annum and valuations?
Yeah. Do you have the numbers right there, Bernardo, or because we have the projection for the next 5 years?
So not the full projection, but if you do a quick off the envelope, it's a $60 billion market. 5% of that would be about 3 billion a year. And then there you have to take the multiple off of that, you know? So that's at least $5 to $10 billion company just with that in Mexico, just on the transactional part of the business, and then on the financing side of the business. You know? So very quick off of the envelope.
Yeah, that's fascinating numbers. Now, in terms of geography, sorry, can you please stop on the slides on expansion to other geographies in Latin America? Yes. I think you've got a slide on that.
So this is one, and as we said, this one is just focused on Mexico right now because we're showing that just to the first half of 2023 of next year. One of the amazing things is just because of that size of the market, if you see at the bottom, today we represent, we're the biggest end-to-end platform in Mexico, and we still just represent 0.07% of the market. So just doing exactly what we're already doing today with the exact products that we've already created in the market. All we have to do is just continue to grow those products to get to the size of the business that we're talking about, right? And then, as Victor said, we'll be looking after 2023 into Spanish-speaking Latin America, so outside of Mexico, right? So, but priority number one, expansion within the country, expanding those products that we've already created and making them bigger.
Yeah, that's great. So we've got a question from one of our investors. So Bernardo or Victor, so could you please, either of you, pick it up? So the question is from Vladimir. Do you
so what
see
are the main
chat?
three? Yeah, what are the main three risks that you see and how you plan to manage them? How important is correct real estate price estimation is for your business? So let me start with the last one, which is I think quite important. Price is extremely important for our business. And that's one of the main reasons why we invested in the data analytics company. Think of a market that doesn't have public information, right? And people don't know how to price their homes. So just having that information, it allows us to, one, understand trends, understand where should we invest more, advise our clients on what is the right price so that you can sell at the best margin or as fast as you want. And at the same time, for the instant sale product where we buy, renovate, and then sell the properties, the money in the transaction is made when you buy the home, right? So we need to make sure that we have a pricing that it's extremely precise, so that we can buy at the right price and not make a mistake in there. No? But again, one of the things that we say internally within Flat is that we're a data company. And we happen to be in real estate. No, but data is part of the core of our business.
In that connection, sorry, Victor, in that connection, a related question is: have you ever experienced, let's say, where you did a mistake? Like, I don't know, buying too high or guaranteeing the price to the seller and then selling at a loss? I mean, or it never happened?
Of course. I mean, I wouldn't say we're always right. That would be an overstatement. So for example, our pricing models have been evolving over time. So let me give you one example of one property that it took us about 20 months to sell. It's on average, we're selling properties in about 5 months, but that one took us 20 months to sell. And the main reason was we didn't take into consideration noise or traffic in the initial models that we had. And that specific property is close to a big avenue with a lot of noise and traffic, and that lowered the price significantly. So every time that sort of we see more and more information, we can start including additional variables that help us be much more precise with the pricing. So we're including things like what is the intensity of light in an apartment, what is the layout of the apartment, what is the layout of the parking spaces, and things like that that do have an impact. But at the beginning, when we started, it was difficult to collect that information just as a brand new company. And that speaks to how hard it is to sort of compete with us, because the longer we are in the market, the higher the barrier is to get the data that we have, right? Because if you didn't collect the data 3 years ago, it's data that disappeared in the market. So it's difficult to get it back.
Yeah, there's. I would just want to add to that, because there's a couple of questions around kind of the risk that we're taking on the property, et cetera. And it's I would say two things. No, so the first, it's a very high margin business for us, right? So on the iBuyer, we have a buy sell spread of 19%, right? So from the price we sell the home at to the price we buy it, there's 19%. This is huge, right? It's much bigger than any other company that does this. So even if we have some fluctuation on our data model, we're still beginning with a huge price differential there. And that's why we've been so positive on the margins we've had historically. That's the first thing that's very important for you to take away. The second one that is very important is, how is that iBuyer product used, right? And what I want to do is take a step back in terms of strategy. And it's, if you go to the e-commerce world, right? What Amazon did in the e-commerce world was they started as a retailer, right? And they would buy products, they would do warehousing, logistics, pricing, everything. And then they created the marketplace, right? And then the marketplace all of a sudden is huge. And that part of retail, they only take risk where they know they're going to win on that product. And it's the same thing here, right? We started, as you see in the slide, 100% of our sales came from that iBuyer product. It allowed us to fix the transaction in the market. But as we got very good at that, as we created a brand around that, we started to add the products where we don't take risk on. We added the brokerage products. We added the third-party marketplace. We added the mortgage brokerage. And all of a sudden you create what Amazon created, which is this huge marketplace where you take risk, where you have to take risk, and you can get a huge margin, and where that's a great lead generator to everything else. And you complement that with other products that you're not taking risk on, that are much asset lighter, et cetera, et cetera. And that's where the combination becomes extremely strong. And that's how you win the market.
Yeah, I think it's called blue ocean strategy, where basically the startup comes into some existing market. You do not create a new product, but you bring technology into some existing models, and then that technology actually generates significant value for the customer.
Yeah.
Right?
Yeah, and exactly. And I think that goes to one of the questions that we didn't completely answer, and it was, what risks do we see, and or what challenges do we see, and how do we attack those? One of the big challenges that we have is we have several different products where we're combining a world where it's a very tech world with an offline, where people still want to go and touch homes, where people still want to have to go and sign documents and notaries, etc. So one of the biggest challenges that we have is, how do we make sure that we're creating technology that gives us the scale to do all of these products at a huge scale? And what we did, basically, it's talent, right? So we brought on our CTO. He comes from the biggest tech company in Latin America, which is Mercado Libre. He led a team of about 150 people there. He's from Argentina, and it's the best talent in all of the region. So we created a tech hub in Argentina where we're building most of our technology from there. And that gives us, again, a huge advantage in the market through that talent that we've been able to create there. And that's definitely a big one. The second one was, how do we make sure we have the best data than anyone else? And then that one we mitigated through that acquisition of that company. And then the last one of the big challenges is that it's a very long customer journey on a lot of these products, right? And customers, both buyers and sellers, don't really know what they want. And the way we've been going at it is, as you create that full end-to-end platform, you're able to push customers to the product that actually works for them. No, and I'll give you one example. People come to us and say, "Hey, I heard you can buy my home in a matter of days. I want the instant sale." And then we ask them why, and they will tell us, "Oh, it's because I want to buy something else. I want to buy another product, another property." And we'll say, "No, no. So then the right product for you is a buy before you sell, right? We'll finance your second home, and then we'll help you sell your previous home at a better price than if I just buy it from you from the iBuyer. So having all those products allow us to actually solve the real problem that the customers have.
Yeah, great. So, and what other risks, gentlemen, do you see in this? Like, for example, can I like throw a risk like to you to comment? What about, let's say, the rising interest rates? Do you see the tendency in rising interest rates, like including in the United States and maybe in Mexico, well, the activity of central banks will impact negatively, let's say, the iBuyer project where product where you basically purchase the property from the sellers?
Yeah, no, so great question. I'm sure Vic, you can add to this, but very quick. I think it's very important. I'm not sure how we're very familiar, for example, with the U.S. market and what's happened over the last few years. And Mexico is completely different. No, in the U.S. there was free access to capital, home prices were going extremely high, mortgages were practically at 1-2%, and all of a sudden now you're going to have the opposite end, right? Where mortgage rates go up, prices might go down, a little bit more complicated real estate sector. Here in Mexico, it's, as I said, it's completely the opposite, where there was never cash injected into the economy by the government. Home prices didn't go up; they remained stable over the last 2-3 years, and people were more waiting on, okay, what's going to happen with COVID and what's going to happen with other factors. So there's more pent up demand in Mexico than anything else. So what we'll see in the next few years in Mexico is prices won't go up. Prices will be stable as they have been for the last 2 years. They also won't go down. There's also a very interesting graph where mortgage rates have been so historically high in Mexico that over the last 15 years, independent of the central bank in Mexico of the rates going up and down, mortgage rates have gone steadily down in the country for the last 15 years. So there might be a minimal effect over the next few months with how that's moving, but we don't see that will make the local real estate market any slower than it's been for the last few years.
Yeah, there's a unique thing in Mexico, which is 50% of the mortgages provided in Mexico are provided by the government. There's a program called Infonavit where essentially works like a pension plan. From the salary of every monthly salary of every employee, the government takes out some money, and that money goes into purchasing a home. And that program is not going to go away, right? It would be a big problem for the economy if that program would go away. And that is run at a loss for the government because the main thing is they want to provide affordable homes to everyone in Mexico, right? So private banks are only representing about like 15-20% of the entire sort of purchases of homes.
So in other terms, you do not see a kind of a macro risk for the iBuyer growth model from the rising interest rates. Okay, we've got another question, I guess, from Igor. I mean, Igor, would you like to announce the question yourself, please?
Yeah. So in Russian, the Russians could read it, and in English, it's basically I translated it for Bernardo and Victor. It's basically the question, you know, number one, the fact that it's not in the U.S. Kind of worries the investor, and the second part of that is 2 years ago everything sounded pretty good, but right now, you know, the recession is going on. Or may actually start. It's not officially going on. Global pandemic might continue, etc. What if you know, people will stop buying and selling houses? How would you guys formulate the answer?
Yeah, so first, I would answer the first question in terms of something outside of the U.S. No, and I think that goes back to one of the first slides that I mentioned at the beginning. No, I think that's exactly a distinct advantage that we have, right? Where Latin America in particular, the growth rates that we're seeing across the technology sector are spectacular, right? And it's not just that there was a lot of capital put into the market over the last couple of years. It's because what has happened in the ecosystem that has allowed this huge growth, right? And as I said at the beginning, so I started Linio, this e-commerce company, in 2012, where Mexico is really, really small in e-commerce, and people were more used to just using social media in the country. One of the biggest users of Facebook, YouTube, et cetera, et cetera. And then all of a sudden, what we've had over the last 3 years is Mexico starting to be the fastest growing country in the world in e-commerce, right? And that's spectacular, that growth. And that's because the ecosystem is there, right? Access to data is much cheaper. People have already been used to other products digitally. And now their first source of going and acquiring products is through a lot of these e-commerce channels, right? And companies like Amazon, one of the biggest markets is Mexico. And we see that across technology sectors. You look at Uber, one of their biggest cities in the world was Mexico City, et cetera, et cetera. So as we've had these success cases in Mexico, as consumers have got more used to digital, it's an amazing time for everyone that's doing technology in Mexico and Latin America to build something for here. So I would look at it completely the other way around, and I would say that now is one of the best moments if you're an entrepreneur to be building something out of Latin America because of the opportunity that represents, right?
And I would add that M&A activity is also crazy in Latin America.
Yeah, for sure, without a doubt, and that's why we've done a couple of M&As. It was asked before about exit opportunities in the future, and I don't think we answered it. As I mentioned as well in the pitch, we have 3 of the top prop techs in the US that are investors directly in Flat. The only way that a US company could come into Mexico is through an acquisition, right? It's not, what we tell investors is, it's not Spotify, right? You don't come to Mexico, you just put a playlist in Spanish and you launched in the market. It's a complex business where you need someone that locally that has built it out. So we have that opportunity where either some of these investors that we already have on board or anyone external, international that wants to come in a market as interesting as Mexico and Latin America, they'll have to come in through an M&A, and we're very well positioned for that, right? So I think that from the Latin American opportunity perspective, I think that was part of the question. I don't know if I missed something.
Yeah, I just wanted to add a couple more data points on the sort of market recession and dynamics. So of course we have been looking at the data very closely, right? And we also look at what's going to happen if there's an economic downturn. We have data since 2008. And one of the interesting things about the Mexican market is that it's very little leverage. So the percentage penetration of homes that are using a mortgage to sort of to buy, and then how many homes are today leveraged, is actually much lower than any of the other developed countries. And what that means is that the swings in pricing are much milder. If you were to look at the prices since 2008, you wouldn't see in the pricing data or in the volume data, you wouldn't see the crisis in 2008, the crisis, so the earthquake in 2017, etc. It's very stable and very correlated to inflation. And the reason is because people are not in a hurry to buy and sell because it's much less leverage. And I want to tell a story on. We started in the middle of the pandemic, right? And we were worried about what the impact of the pandemic was going to be. And in March 2020, we stopped completely operations because we said, hey, we don't know what's going to happen. Let's wait and see. And it turned out to be the opposite problem that we expected. In fact, what we realized is that people value their homes much more in a pandemic, and they were looking for additional spaces for a home office, for additional space for a terrace. And a lot of people were upgrading their homes because they were spending 24 hours in their homes. And the fact that we were 100% digital was a big differentiator against the status quo in the market. And compared to pen and paper broker, it was much easier to transact with us than to transact with a traditional broker. And it happened the opposite problem that we expected. We ran out of homes and we didn't have inventory to sell. So we had to rush and start buying again quickly. So that in terms of the pandemic.
One more question that I had, it came in my mind once you were talking, Victor. So there are two pretty good, pretty large related verticals in this market. One of these is foreclosures, basically where you work with properties that the banks have seized and they would like to sell it as soon as possible. And now you could potentially help those kind of lenders that had the title, the mortgages to basically sell the homes. And the next pretty big market is the rentals, the home rentals. So far you've been describing the iBuyer, which is kind of buy sell, and the rest like brokerage, it's still about the buying and selling. So what about the apartment rentals and home rentals market, which is probably also very huge in Mexico?
Mm-hmm. Yeah, that's right. So let me tackle the foreclosure market. It's not something that we have gotten into because of the legal process of the foreclosure can usually take up to a year and a half. And that could be very costly for us to go through that process. We'd rather get the client before they default on their mortgage, because that's a win-win-win for everyone. When a client is about to default a mortgage, we can go in and say, hey, I'm going to buy your home. You're not going to be reported to the credit bureau. You're not going to have problems getting a mortgage in the future. The bank gets their money back, and we get a property at a good price. And that's a much better time to buy a property because the foreclosure process is actually very complicated in Mexico. Now, in terms of the rental market, it is a big opportunity, as you say. And we think it's something that we should be tackling in the future, essentially because we have already built a network of brokers that not only buy and sell properties, but also rent properties. So it's very easy for us to flip a switch and have the rental product in the market. We want to stabilize the products that we have in the buy and sell market before getting into the rental space so that we don't fragment ourselves and lose focus. But it's definitely one of the markets that we should be tackling in the future.
Yes, because as Vic was saying, as we built out this third-party marketplace, basically all the brokers that were already working there to buy and sell homes, so it's the same brokers that have rental properties as well, right?
Mm-hmm. Absolutely. Also, I heard that margins in rental business might be a bit like larger, at least for brokers, but not sure about Mexico, but could be a bit larger. And also the rental business is a little bit easier. I mean, to rent the apartment is easier than to sell the apartment.
Exactly. But that's exactly, if you've seen how we've built this business, we've always started from how do we solve the harder problem in the market first, and then how do we build on top of that? We started with the most complicated product, which is iBuying, right? And then we built out the home broker, then we built out the mortgage broker, etc. Again, as we build out this third-party marketplace, if you're talking to the biggest brokers, their biggest challenge is how do they find buyers for homes, right? And we're solving that, for them. And that allows them to get very close to our operations. And then it's easier just to say in several months down the line, hey, now can you add on your rental inventory as well and just flip the switch on rental? But starting from solving the harder problem first, that creates more stickiness with those brokers. And then we open up rentals in the future.
Great. Yeah, thank you. So any more questions?
There was one question on marketing channel and how much does it cost to attract a customer? We didn't answer that one.
Yeah, so in general, one of the interesting things about what we've been able to build, and I talked about at the beginning, is you don't have to use a broker in each one of the transactions, right? We work with the brokers to allow us to be bigger, to work within the ecosystem, et cetera. But we're also able to drive direct buyers into homes, right? So over 70% of the sales that we do at Flat are with direct buyers that we bring onto the platform without ever touching a traditional agent, right? And that's huge. That's much bigger than any prop tech in the US can do, because simply regulation doesn't allow them to do it in the US. And there, where do we get those buyers? It's mainly digital marketing, right? So the traditional digital channels, whether it's Facebook, Instagram, Google, etc., where we've become that go-to source for home buyers.
Yeah, one important thing to note is within this round, one of the investors that is coming is a large media partner. So as of today, we have been doing mostly digital and sort of some offline. But with this partner that we're executing a media for equity deal, we're going to have also sort of traditional media like radio and TV and so on. And we think that's going to help us grow exponentially and at the same time reduce the cost of acquisition for clients.
Yeah, that's awesome. Gentlemen, may I ask another question? And yeah, maybe this is the last one, at least for me. I promise not to ask any more questions because otherwise I will consume the entire allocated time for this stream, for this speech. But the question comes into my mind from, let's say, the old resemblances from, I would say, less developed markets, or less also markets which resemble, let's say, a little bit or more or less weaker compliance environment, particularly tax compliance environment. Well, obviously, I'm not sure about Mexico, but if I think by analogy, like back in the days in countries like Russia, Ukraine, Kazakhstan, so there was a kind of a tendency for buyers and sellers in home residential real estate to artificially reduce the price of contracts, just with the plain idea not to pay tax from the official sales price, and also related cash settlements for apartment sales. So can you imagine the situation? I'm selling my apartment to you for $500,000 in cash, and then we indicate, let's say, $100,000 in the contract, so that the seller pays less tax, or maybe pays zero tax from the apartment sale. So, I mean, out of curiosity, how you guys, I mean, how your business tackles these kind of challenges where basically if it's iBuyer, if it's all online, I mean, are you forcing your clients to disclose the actual price of the transaction, and how you deal with cash settlement? I mean, does this phenomenon exist in Mexico at all? Or maybe the market is mature enough and I mean, you guys all pay through bank wires or somehow else?
Yeah, so the quick answer is the latter. So the market has evolved, and all transactions today are through bank wire. It used to be the case, Vladimir, that people used to report significantly much less than the actual transaction. But there's several things that now make it very, very difficult for this to happen. The first one is every single home needs to have an official appraisal that has to follow certain guidelines, and the government gets the information from that appraisal. And if the price of the transaction is within 10% difference from the appraisal, then there's a huge tax burden for the buyer. At the same time, cash transactions are very limited today in Mexico. You can only transact about $35,000 in cash, and the notary is partly responsible for that. If there's a bigger transaction, you need to report it. The notary is liable for reporting that information, and it's actually very hard to do. So in our case, we don't allow any cash transactions. All our transactions are through bank wire.
Yeah, it's actually great to know that the government regulations basically facilitate the flats business. So it's all comes so organically together that, let's say, 10 years ago, before those stringent regulations on valuation, you might have not even been able to scale. But now the government and what you are doing just gets hand in hand.
That's right.
Great. Ladies and gents, dear investors, any more questions? Because like such an interesting business model and such great opportunities for growth, I would use this opportunity to ask even more questions. So maybe Igor Shoifot, if he's still online, not sure. Okay, I mean, then I guess, dear Bernardo, dear Victor, thank you very much for
Thank you.
this. And yeah, we thank you all for this excellent presentation and Q&A. And yeah, so have a great day. And with this, you may just log out. So we'll come back to you on the status of the rise. And yeah, again, so we'll get in touch with you.
Great. Thank you so much, everyone.
So,
Thank
thank
you.
you.
Bye.
Take care. Bye.
Thank you. Bye.
Thank you. Bye.
Тогда, дамы и господа, наверное, этот стрим мы заканчиваем, и тогда любые вопросы можно уже тогда направлять в личку. Большое спасибо всем. До свидания.